Hello traders, Jeff here with another video. So I'm embarking on 3 new sections on the course to flesh out the setups and give some nuance and further insight. This video is on setup 1, our core key level setup. Basically, this is our desert island setup that I need everyone in the group to master. You can pinpoint entries using the order flow. This is kind of our secret weapon to find trades that can use for quick confirmations, getting in way before retail traders. We're trading with pro tools here, digging deep into the FX futures market in order to deduce entries. This will take some time to master, but I see students under mentorship picking it up fairly quickly, but it does require patience, focus, and adherence to trading rules. So in this introductory video, I'm going to show setup 1 in action and explain it in the context of the process flow diagram. Now, let me make this abundantly clear. If you can master this setup, then you're set for life. It works in any market. I happen to trade cable mostly. That's kind of my baby, but if you want to trade Aussie, Euro, gold, whatever, go for it. It's all based on fundamental market dynamics. So after this introductory video, we'll start fleshing out each section with more examples, videos, and with images. Now, I came up with this setup through market observation. Key levels is my baby. The real purpose of this section is to show like real life situations where sometimes the rules will be bent slightly. When and why we can do this. Now, when I say bend the rules, I'm not saying just trade wildly, wherever, whenever. You're still following the flow diagram, but sometimes it'll be just like, 90% there, and we can go for the trade anyway. Now, let me make one thing absolutely clear. We are discretionary, systematic traders. We follow a system, but use discretion for targets, using market facts and knowledge. This will come with time. I call it market context, and we have some tools that we can deploy to deduce bias. My favorite is the dollar index and what's known as liquidity analysis. The market is usually moving for a purpose, okay, to find liquidity usually. This, combined with the Dixie and market profile, gives us a powerful insight into the direction of the market. So let's start with the process flow and follow along with the trade that we all took on Friday together. So process flow. You're going to find this under section 3.1, flowcharts and weekly examples. So red is necessary, green is optional, and gray is no trade. Okay, so we'll start. All markups present, evening and morning routine done. Now this is really important. Okay, if you have not done these routines, then no trade. Okay, you complete the markups. Morning routine. Okay, just do all this. If you don't understand any of this, then DM me. Very important is these two ones at the end that are sometimes skip, to be honest, but I'm making a commitment to do this more regularly, and it's take a little break after you've done your morning analysis. Breathe, meditate, do some self-reflection, think about errors you've made in the past. Walk outside, take a cold shower, do anything that you need to do just to kind of reset yourself. We have a psych section, trading psychology. Print out your mental hand history and your A to C game analysis. Review your C game. That is your weaknesses. So go over all this before you even think about starting a trade. Okay. Now, next is wait for the key level to be broken by 4+ pips. Now, what are key levels for a start? Okay, it's session highs and lows, Asia high low, Frankfurt high low, London M15 swing highs and lows intra-session. You can use the swing high low indicator if you wish. New York M15 swing high lows intra-session. previous days session highs and lows, daily highs and lows, weekly highs and lows, and add to that the weekly point of control. That's something I'm gonna add. So that's like the highest volume node or a level of the week or the previous week. Those are also key levels. Okay, so let's see in the charts. We have our key levels marked up. Asia high, we're gonna get to the Frankfurt high soon. If we go down, we've got the daily open marked, the Asia low, yesterday's low, and we can keep going down. We've got all the pivot points marked up. Monthly pivot point, this is a demand zone. 21st of October, Friday low. I mean, we're really getting into everything here, okay? Do not miss like daily highs and lows because they're very, very important. Now, get this out of the way for a second. So our markups are done. If this looks a bit messy, apologies, but it'll all become very, very clear soon. So let's press play, see what happens. This is replay mode and we're at 6:30. Okay, what we noticed is this M1 uptrend. We get to a high volume node that I've marked up from market profile. It acts as resistance. There's a small accumulation and a drop. Okay, so this becomes M1 supply because it breaks structure, right? So this is actually an example of setup 2 that you could have taken. But this video is about setup 1, so don't worry about this for now. I've identified a market structure using the footprint. There is a 31-0 imbalance here, which is a structure level. Any zero side imbalance with a large opposite side is a structure level. Okay, so we've made the supply, which has broken 2 structures. So you could have traded off this using setup 2. I did not do that. What I was waiting for though was a retest of this M1 supply, and what actually happened was this major spike up with thousands of contracts. So I don't know what was going on there. Probably some high frequency traders messing up the market. I don't know, but we noticed the huge spike that you get in forex. Sometimes you have to be very careful. I did actually trade off of this. I traded short for like 10 pips because this was NFP day. My general mindset was just collect 10-20 pips because the market's probably going to be a bit rangy during NFP day. Now, digging into market context, this is the morning analysis. I pointed out that it was virtually inevitable that we would take out the 21st of October Friday low. Why is that? Because there's a lot of liquidity below here. The market's trending down, and I think it was very likely that we would have a short bias because of this liquidity and also what becomes yesterday's low. Okay, so that gave me a short bias. I'll also show my supply and demand zones. We're kind of in no man's land in terms of supply and demand, but we are trending down on weekly. You can see we hit this weekly supply zone and we are now engulfing down. This daily demand, pardon me, was broken and we're moving up slightly. DXY, opposite picture. We are reacting off weekly demand. It's trending up, so that's kind of a corollary to GU. It's the opposite, right? It's almost a mirror image, kind of sideways on daily. This is a manipulation range. Eventually both sides of this range will be taken out. 4 hour, 1 hour trending up. Okay, so kind of a short bias because of this liquidity target. One other thing, we have this what's called an hourglass on the market profile. Okay, so hourglass shape, like two large volume areas and this void that I've pointed out that will eventually be filled. So that kind of adds another piece to the puzzle because eventually this is going to be filled And because it's NFP day, you know, my knowledge of the market tells me that we're going to go up eventually and fill this. So yeah, I have a short bias for the day, but NFP, you know, we're eventually going to fill this void because it's so low volume. Voids are always filled, okay? Nature abhors a vacuum. This is what's known as a fair value gap or hidden gap. And the rest of it, I'm just talking about what Dixie's gonna do, okay? So DXY, the dollar index, I think it's gonna move down, take out the Asia low, which it does. That means GU moves up, but after that liquidity is taken, then we're probably gonna move up on the dollar. So that adds to my short bias, okay? I hope that's clear. It might seem complicated to like a newer trader, but you will get used to this. Trust me. So we'll let it play out. And what do we see? We get often in Frankfurt, pre-Frankfurt, we get this choppy sideways action, which you don't want to get involved in. This is what's known as accumulation, up, down, up, down, up, down. Then it breaks out and goes to this market structure. I've marked out now the Frankfurt high because that's us at the start of the Frankfurt session, so we've made a high, okay? Here. And this will be the low. Well, actually, we go all the way down here for the low, so let's play it out. Now, because Frankfurt high is a key level, I move it to here because that's also an M5 swing high. I'm looking at here as a liquidity target. I'm thinking the market will move up and then take out this liquidity, then go short. So that's my first idea. So although this is going to be setup 1, it actually failed because it only went halfway. It didn't go to my target. So I ended up getting like, you know, 5 pips, a handful of pips or whatever. But we can show it. So we'll create an M1 supply, broken structure here, okay? Broken a structure, M1 supply. Very quick takeout of the Frankfurt high, okay? So I'm now in this trade. It was based on absorption at the time, but I'm not really talking about this trade. I'm actually going to focus on the next one because this trade didn't work out for me. So it goes down. Pretty happy, but then accumulation and moves back up, okay? So what? The market moves 20 pips. So, you know, I could have grabbed that. I did not. So that was a kind of a failed trade, you know, but when I was moving up, I saw what was going on and grabbed my 5 pips or whatever. So it covered my stop loss for my next trade. You know, if you see basically that your plan isn't working out, I had planned all the way down to this daily point of control. If you see it doesn't work out, you know, stop, get out the trade, have some contingency plan. So keep playing out, and you see this trend line develop. Okay, so we do not trade off of trend lines. Okay, we don't trade trend line bounces, but we draw them on the charts because what's under here is now liquidity, because people are trading long, and as they're trading long, they're placing their stops, you know, under here, under here. Okay, this is the crucial point. Pay very close attention to what's going on here. What's happened? Asia high, okay? The high of the Asia session, which is here. It's taken out now. The Asia high always has liquidity, okay, above it. It's for breakout traders who are maybe placing limit orders here for breakouts. You know, people love to trade breakouts, so they'll trigger any orders up here, and we can see it in the order flow. Okay, so what's happened? Now, this large bullish candle breaks structure, Asia high, and it gives us this imbalance, okay? 0.40, 0.40, huge imbalance, okay? And that represents structure, okay? Any zero side imbalance with a large opposite side means a break of structure. So that zero becomes a structure level, okay? So you mark it out. Okay. Yeah, well, you get the idea. My rectangle disappears, but you get the idea. This zero becomes structure, okay? And what you notice is a retest of that structure, okay? Well, let's play out a little bit slower. Down move, structure broken, okay? And retested, okay? So that's confirmation 2. Structure represented by this imbalance, broken. Now, I actually traded this aggressively. You can call it FOMO or aggressive trading. I actually traded as soon as this structure was broken because I was quite confident in my bias. I do not recommend that to new students. I recommend that you use a more conservative approach. And honestly, it's not, you know, rocket fuel here. It's quite easy to do. What you see is the structure is broken, and then it retests it, okay, in this little M1 fair value gap. So that's your entry, right there. And what's your stop loss? Above this candle, or above this candle. So you can use 4 or 5 pip stop loss. What I tend to do is I have a mental stop of say 3 pips, but a hard stop of 4 or 5 pips, sometimes 6. You know, you have to let it breathe sometimes because you can see it spikes. You know, it spikes into that structure, and you need a bit of breathing room. So if you go like, you know, 2 pip stop loss, you might be taken out, okay, and lose your entire risk. So it's not realistic to have like a 1 or 2 pip stop loss. You know, anyone who says that is a charlatan. 4 pips, 3 pips, you know, really you're pushing it there. For new students, I would recommend 6 to 7 pips as your stop loss. But to be very clear, we do have a precise level to trade off of here. Okay, so that's confirmation 2. Break structure, retest. Okay. Asia high taken out, and we're in the trade. Okay, we're all in this trade. And where are we targeting? Well, we have a short bias, okay? So we're letting it ride. And what did I target? Frankfurt low. Why not? That's a key level, okay? You could have targeted, say, yesterday's daily point of control. I ask you to use logic and think of a logical target to go. And it depends how aggressive you want to be. Use a bit of thought. In this case, Frankfurt low was the target. We all took this live. Now what's happening? You know, I'm just marking out little supply zones just to see what happens. Because, you know, as this is ticking down with your you know, 4 pip stop loss, you're probably in with quite a lot of lots. You're maybe getting scared at this point that the trade is coming back on you, and it, you know, it very likely will come back on you. In this case, we're still in the trade. It comes back, just does a little retest. Yeah, just for interest, let's draw Fibonacci. Just, you know, hang low. You know, it hits. This is our kind of magic level, the 70.5. Okay, it hits that. It's amazing how accurate this is. Okay, 62 to 79. That's your kind of golden zone. That's an ICT teaching. So if ICT is watching, Michael, thank you for this. That is a very valuable tool. That 70.5 level. So we retest that. And straight down. Let me speed that up. I actually took this out for like 25 pips because it was NFP day, and now NFP is approaching, and you'll see the NFP spike. Boom. Target. 12R. That's your week finished. Okay, this is the NFP spike. What does it do? Pause. Takes out yesterday's low. Okay, so you could have targeted that. If you had the balls to trade NFP, you could have targeted yesterday's low. But we should be happy with the Frankfurt low. You know, we get there before NFP. Now, what's happening? We're moving up rapidly. Okay, we've taken out yesterday's low and we're moving up like nothing else. Why is this? Let's go back to the market profile. Okay, we're gonna fill this void. That's the whole point of NFP day. Okay, we're gonna fill this imbalance. So if you're smart, if you're really on the ball after yesterday's low taking, you're going long. Okay, if you have confirmation. I actually did this, but I held for maybe like 10 or 15 pips or something. You know, or maybe it was 20. But you know, I'm actually following the rules there. I see the spike, I see the reaction, and I just get in. Okay, that's an aggressive, what I would call a quote-unquote Jeff trade. You know, you're still following the key levels, you're seeing the clear reaction. We know that after a key level is going to be hit, the NFP is going to take up and fill that void. Okay, so that is setup one in a nutshell, and it followed all the rules. If we go here, we wait for the key level to be broken, Asia high, wait for the trading level, begin observation of confirmations in the footprint, confirmation 2, wait for a shift in market structure or break of market structure in M1, which we did. We broke the imbalance. Observe a large imbalance, which we did. We had 0.40. I'm saying be ready, wait for a relatively low volume retrace into footprint and imbalance or FVG. Now this can trip up traders, and this is where we slightly bent the rules, because if you do look at the volume, it is slightly high on the retest, 126, but in relative terms, you know, it's not it's a down close candle. You know, we're not really running up with high volume here. See the bullish move? This is what we're talking about by relatively low volume. Okay, bulls are not really taking control here. It's bears. So we can see that in the retest. All right, so don't worry about this candle. You're more thinking about these bullish candles. Okay, this is low volume. This is obviously a retest. Use your head. Okay. So that's it. Place entry and stop loss according to risk management plan. Now, you always have a stop loss, whatever it is, depending on the trade. If you have a precise level, then you can use 3-4 pips. Have a risk management plan. If you do not have a risk management plan written down, go back to baby pips and get this done, or DM me and we'll work together on it. Take profit at a logical level according to your daily trading plan. Your daily trading plan is in your morning routine, and then journal. Okay, take a break. Very important. Take a break, 15 minutes or more, because after you take that 12-hour, let's say you take 30 lots or something, or, you know, 12-hour. How many pips was that? You know, you've done your work. You know, 50 pips, right? So forget it. Take a break. Don't do anything else. Your day's over. You're done. You get trades like this every day, so no worries. If you want to discuss this more, feel free to contact me, Jeff T on Discord. We do trades like this every day. This is just setup 1, and we're gonna add more videos like this onto this section, along with also images of this setup in action and how we trade it, and how, for example, like say Well, say we miss the entry, can we get in later? Yeah, we can. How do we do that? Well, switch to 5 minute. Now, there you can't see it, but there's a fair value gap here, FVG. Okay, an unfilled void. It wicks into it, fills it, and then you can have an entry. Okay, you've done your Fibonacci. I don't have the order flow handy at the moment, but there's a second entry if you miss it. But hopefully you didn't miss it. So you've always got a second chance. Don't worry if you miss the first entry. It can be very frustrating. If you miss it, say, and you don't have the confidence to enter, what I would suggest is that you're highly focused at the time of entry, and you're not in the chat room. Okay, you're not talking to people. What you're doing is zooming in like this and watching the hell out of it. Okay, break a structure. What's this? Doji. Big engulfing candle. Refill of FVG and the 0.40 imbalance, and there's your very precise entry. Okay. Now it doesn't get clearer than that to me. I think that's a great trade, and we will have a lot more like this. So thank you for listening. Sorry for the long video, but we'll have more like this in future, and cheers.